please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Well, India's first full-time woman defence minister taking to the skies today, quite literally, Nirmala Sitharaman flying a Sukhoi. Good evening. Thanks very much for joining us on What's Hot. That is one of our top stories this evening, but let's go to the big CNBC TV18 news break. India's banking landscape could undergo a massive overhaul if this decision goes through. CNBC TV18 learns that the government is considering a proposal to allow 100% foreign direct investment in banks. That's not all. Sources also tell us that the government is mulling a hike in FDI cap for the public sector lenders as well. Timsy Jaipuria, who broke that story, joins us now with details. Timsy, this was a proposal that was being toyed about a few years back. It was then put on the back burner. We understand that it is back on the government's table for consideration. What are you picking up?
Well, a big boost for the banking sector could be on the anvil, and what I understand from sources is the fact that government is currently mulling an option to hike the FDI limit for private sector banks from current 74% to 100%. Meanwhile, for public sector banks, government is considering a proposal of hiking the limit from 20% to 49%. For private sector banks, up to 49%, any private sector bank can raise FDI without taking government's nod. Whereas hiking FDI from 49% to 74%, you need a government's approval. Now, what I understand, the proposal is on the drawing board. The proposal is under active considerations, and Finance Ministry could soon firm up its view. The discussions are going on between various departments of the Finance Ministry, that is DEA and DFS, and DIPP, which are the main key stakeholding departments which are currently discussing this proposal. After Finance Ministry takes up a final view, it might also approach PMO for a formal nod before announcing this development. Now, what is the benefit that the government is seeking by going ahead with this proposal? Now, the benefits attached with this include improving the service quality for the banks, improving the reach that the banks have currently in India, and most importantly, helping in meeting the minimum capital requirements. So all in, it is going to be a big boost for the banking sector or not is something that we need to wait and watch, and most importantly, how soon the decision can come into force. Back to you.
All right. Thanks very much, Timsy. It is currently in active consideration. A final decision has not been taken just yet. We spoke with 4 former RBI deputy governors to get a sense of how they look at this development or possible development. Take a listen.
When government exits, then there has to be some serious investors who will be able to take care of the bank management, the board level operations, and also commit for further capital for the growth of the bank. So keeping all this in view, 100% foreign direct investment in private banks is also welcome.
As far as private sector banks are concerned, I have a different viewpoint. I would not be totally happy with 100% FDI. 74% itself is quite a wide worth. But my belief is that there has to be a local anchor or core, holder in a private sector bank. And with the 100%, I think that idea is not going to happen.
Banking is a very sensitive area, and we have seen during the crisis time how foreign banks did behave. So we have to balance between the need to attract foreign investment. I think one has to set between one stop this in this instead of opening up whole house in one go.
You see, look, ours is a capital-starved nation, and we require capital. And capital cannot come from internal because we have a current account deficit. So there is no other way. If we are allowing 74% in the private sector bank, I don't understand why it cannot be 100%. When FDI will come 100%, that does not mean one entity will 100% because there are restrictions that individual entity cannot have more than 10%.
Once that capitalization will come from this foreign investment, then definitely this valuation of the particularly PSU banking industry, which is at low ebb, that will also improve. The only thing is we should be below 51%. So overall character of PSU bank will be there, and whatever goals you are having, you can fulfill that also.
All right, so RBI former deputy governor is weighing in on the possibility of the government hiking foreign direct investment to 100% in private sector banks and to 49% in public sector banks. The other big story tonight, the government today announced that it will need to borrow an additional 20,000 crore rupees this fiscal instead of the 50,000 crores that it had planned earlier. Remember, in December, the government had announced its plans to raise 50,000 crore rupees via dated government securities for the rest of the financial year 18. This had given rise to concerns that the government may not be able to reach the 3.2% fiscal deficit target. In fact, the worry was that it would breach it. Sapna joins us now. Sapna, what has led to this cut in the additional borrowing?
Well, the government has announced the reduction in its additional borrowing for the current financial year by at least 30,000 crores. So basically what they will end up borrowing extra would be 20,000 odd crores against what they had announced on 27 December, an additional borrowing of 50,000 crores. Now, very clearly, the government has indicated that this announcement has come on the back of a review of the revenue and the expenditure trends. So picking up from there, what we do understand as of now is that probably the government will be closer to meeting the 3.2% fiscal deficit target set out for the current financial year. This reduction in additional borrowing by 30,000 odd crores will definitely be a help on that front. But the indication is that they'll be closer to 3.2%. So probably it's still a open-ended question. Apart from that, on the brighter side of the coin, what we do understand is that possibly the divestment target, they're going to surpass that in the current fiscal. Now, that again is a steep target of 72,500 odd crores. But we understand that once the ONGC HPCL deal goes through, somewhere around 33 to 35 odd thousand crores may be coming into the government kitty, clearly exceeding the divestment target set out for this year. Apart from this, we also understand that the trend in terms of the direct tax receipts is buoyant as of now. Even if the current trend continues, they will definitely meet the target. In fact, the understanding probably is that they should surpass the 9.8 lakh crores, in the current fiscal itself, in the current financial also. So if that happens, then that would be a big boost for the government, because the DT target is pretty steep in the current year. Having said that, we also understand that some rationalization of expenditure may be in line. Now, there is a framework that the government already has in place in terms of monitoring expenditure very closely. Probably that's going to be tightened further. And mind you, the budget is now on February 1. So the government still has around 2 months, Feb and March, to basically relook at these numbers which will come out in the revised estimates. But clear indications coming on the front that closer to 3.2, but some fiscal slippage is still not ruled out.
All right, Sapna, appreciate you joining us. The additional borrowing number coming down from 50,000 crores to 20,000 crores. Now, the government's move to scale back on its borrowing program did help bond prices recover in trade and push the yields lower. Bond markets have been on a roller coaster ever since the 50,000 crore rupee program was announced on the 20th of December. RBI's Deputy Governor Viral Acharya's comments yesterday also had added to the volatility. He had told banks to fend for themselves after they sought more time to provide for bond market losses. That's the bond picture playing out on your screens. Meanwhile, revenue collections from GST have not been up to expectations so far, but there is some good news coming in for the government on direct tax concerns. The latest data shows that the government has collected over 6.89 lakh crore rupees under direct taxes this fiscal so far, and that is an increase of almost 19% when compared to the corresponding period last fiscal. With this, the government has already reached 70% of its FY18 budget estimates, and the cushion could be provided on the direct taxes front, as Sapna was reporting. But a momentous day on the Lal Street today. Markets entering alien territory as most indices breached existing all-time highs. The Nifty saw a sharp dip at the open, but then the news that the government has cut the extra borrowing target triggered a sharp rally. The index surging past 10,800. The Sensex also scaled Mount 35,000 for the first time ever, closed with gains of close to 1%. The Bank Nifty shattering its earlier highs, ending just shy of 26,300. Anuj joins us now. Anuj, the party, they're continuing on the Lal Street.
Phenomenal day for the markets, of course. In the morning, things looked slightly tough. The mid-cap index, in fact, was down quite a bit. Advanced decline was about 1:7. But after that, we saw a huge recovery, led, of course, by the money markets first. But after that, there was no stopping back. The Sensex hit 35,000 and actually closed above that, added another 100 points towards the end. The Bank Nifty as well, 26,300 on that index now, 10,800 almost on the Nifty. So clearly, the basic trade of this market, once the 10,550 level was taken out, was to buy the dips, and the market is rewarding. In fact, that's been the market's template. Just want to talk a bit more about how things have evolved over the last 2 or 3 years. The bull market really started at the time of Brexit, and after that we have seen Brexit, we have seen demonetization, we have seen GST, and amidst all of this, the market has only gone up, which is clearly an indication that we are in a real big bull market, which is climbing wall of worries. Also, the other point is that now we have started to see rally in the big PSU banks. We have started to see rally in infrastructure, capital goods. So this market right now probably is in phase 2 of the bull market. No longer nascent, but nowhere near the euphoria or the end phase, like a lot of people think could be the 2008 phase. We are nowhere near that. And that's also one good thing which is going for the bulls. Tomorrow, of course, is weekly options expiry. So maybe there's some more short covering which is left. But the last 2 or 3 days, once again, the market's message is simple: just buy the dips.
All right, Anuj, thanks very much. The bulls in charge there. Time for a break, but coming up next, a 5-judge Constitution bench of the Supreme Court begins the final hearing in the Aadhaar case. All the developments when we return. The GST Council, the top decision-making body under the new indirect tax regime, will meet tomorrow. The meeting is crucial as it comes less than 2 weeks ahead of the budget. And what are the issues that are likely to be taken up? First, we learn the rates of as many as 70 to 80 goods and about 40 to 50 services could be up for rationalization. This, however, is not expected to have any adverse impact on the government's revenue. Secondly, as we've been reporting, the council is expected to take measures that would make it easier for taxpayers to file returns. That's not all. It could also take steps for a seamless rollout of the e-way bill, which takes place on the 1st of February. Moreover, the council will discuss whether or not real estate and petroleum products would be brought under the ambit of the GST. Speaking of the GST, Punjab's Finance Minister Manpreet Badal, who's also a member of the GST Council, has asserted that the Congress Party will push to bring petroleum products and real estate under the ambit of the GST. But what he has categorically said is that the GST implementation continues to be fraught with issues. In fact, he believes that revenue collections that are already looking fairly disappointing will look even worse if the refunds were to be given out to exporters. So we will get more on the GST Council's meeting here on CNBC TV18. But it is a historic day for India's unique identity project. A 5-judge constitution bench of the Supreme Court has begun the final hearing in the Aadhaar matter. The bench, headed by Chief Justice Deepak Mishra, is hearing a total of 27 petitions. Ashmit Kumar, who was in the courtroom tracking the hearing, joins us now. Ashmit, what were the key arguments that were presented before the Apex Court today on the Aadhaar?
Well, that's how you rightly put it. This is in many respects a historic hearing by the Supreme Court. 5-judge bench will decide on the constitutional validity of the Aadhaar. To move ahead, today was, of course, day one. Sham Diwan was first off the blocks. He raised some various pressing issues with respect to implementation of Aadhaar. He argued that as far as Aadhaar is concerned, it has come in by way of a smoke and mirror strategy by the government to ensure that people are tied down in an electronic mesh. He also went on to say that there will be an electronic trail traceable for as far as every citizen is concerned, and that this is in blatant violation of the right to privacy, especially now that we don't have a data protection regime. He also went on to argue that various rights and amenities that should naturally be available to the citizens are now made dependent on the Aadhaar, which invariably means that there is an atmosphere of exclusion, especially as far as rural areas are concerned. He also said that at a theoretical level, this is bad in law, that it allows for state domination, that the Aadhaar will hollow out the Constitution, and that he warned that the Constitution is not a charter of servitude. These are, of course, a quick wrap of day one's arguments. Keep in mind that given the sheer number of petitioners and respondents, the proceedings are likely to pan out over the next couple of weeks.
All right, Ashmit, thanks very much. More on that on India Business Hour. We do have to wrap up this edition of What's Hot, but do stay tuned because it was a momentous day for the markets. The Nifty touching 10,800, the Sensex conquering Mount 35,000. Our special broadcast, Bulls Charge Ahead, coming up next.